Now, just keep your eye on Wall Street. After a manic past 12 months, things seem to have quietened. It's like a duck. All the action is going on where you can't see it. For example, will the Fed keep going with its aggressive interest rate rises? Will the debt ceiling freeze US government services? And just how quickly can tech companies and others shed workers and costs? We're going to find out much of that this week. So let's go to Kenny Polcari, the founder of Kace Capital and a commentator for Fox Business, CNBC and CNN. Now, Kenny, it's kind of eerily quiet out there in the markets right now, isn't it?
Yeah, it's actually very complacent. You see the VIX is trading at near lows, right, if not at the lows, which really could be viewed as a contraindicator because it suggests such complacency that people don't think anything could go wrong. And I think that's where you have to be careful. But look, over the last week and a half and even today, the markets have traded in a really tight range. No dramatic moves up or down in either direction on any bit of news, even though we're now in the middle of earnings season. So it's very curious to me that the market is so complacent, but it's waiting patiently to see what we hear out of the Fed.
So this is a key because it also is about just how many workers, how quickly those tech companies can shed costs. And while it's inflation as high as it is.
Well, so I think you're going to be surprised in the tech sector, right? Meta, Amazon, Apple, they've made it very clear that they're shedding workers and they're shedding them quickly. They've been doing it now for 3 or 4 months. We already know that it's out there. I think what you actually might find is a surprise to the upside in the earnings, right? And a lot of it's going to be because of how they controlled costs or eliminated costs versus growing their business, right? But at the moment, I think investors are concerned whether or not they can maintain their margins, what their expenses look like, what's it look like setting up and going forward. And so I actually think the tech names, the big tech names that we talked about, are going to go higher. Now, look, news came out today that Google is paying Sundar Pichai, the CEO, $220 million. That's what they came out and they told them right ahead of their earnings, they're paying this guy $220 million. And, they laying off all these people and they're getting it set up. I can't imagine that if Google's going to come out with a really negative report, that they would want that news to be the first thing that people remember, that they're paying the CEO some crazy amount of money.
Well, Kenny, you're old enough to remember the days that to become mega rich, you had to own a company or you had to create the company itself. You couldn't just run the company, could you?
Right. It wasn't when we were younger growing up, right? It seems to be the way it is today, though.
Okay, let's go to the Fed now, because right here in Australia, the Reserve Bank, our central bank, has put rates on hold, though the bias is on the upside. But this idea of pausing and seeing what comes will happen. But the Fed hasn't shown any real signs of doing that yet, has it?
No, it hasn't. But I will tell you, there was the majority sense that we're going to get this May rate hike by 25 basis points, and then the Fed was going to make it clear that they were going to pause. That was, for the last 4 or 5 weeks. Then we went through a period right after PPI came out a week and a half ago when the PPI was much weaker than expected, which was actually better, that maybe the Fed wouldn't even hike in May, that would give them cover to pause even now in May. We've lost that conversation. Now we're back to 25 basis points in May. There's a 90% chance in the swaps market that is suggesting a 25 basis point hike in May. But there's also now building a 25% chance that we're also going to see a June rate hike. Now, look, the Fed has made it very clear. They want the terminal rate to be somewhere between 5.5%. If we go hike in May, 25 basis points, that's going to get us to 5.25. Jimmy Bullard, Fed president from St. Louis, Loretta Mester, Fed president from Cleveland, Neil Kashkari, Fed president from Minneapolis, in New York, John Williams, the Fed president of New York, has made it very clear that they are concerned that inflation remains sticky and the bias is to the upside. So now the question is, okay, if we get a hike in May and then we get a hike in June, that'll take the terminal rate to 5.25, 5.5, which is just about where the CPI is. CPI last month was 5.7%. So the terminal rate needs to be above the inflation rate. But if they get it almost even and then CPI starts to come down, then they will be okay pausing. If CPI turns around and lifts its ugly head and starts to move higher, then the Fed's going to have a problem, which is why I'm now in the camp that I think we potentially get 2 more rate hikes and then a pause.
So adding to the recessionary talk in the US right now, you've got the whole issue of the debt ceiling. There's no agreement inside Capitol Hill as to which way this will go, how Republicans will react if government services stop or if government officials don't get paid. That's the sort of thing that can tip your economy into recession.
Well, it certainly will. And look, that has happened before, right? Where they haven't come to agreement and we've seen some services shut down. The government has never defaulted, though, right? The language over here is trying to create fear that the U.S. government's going to default on its debt. Oh, my God, it's the worst thing in the whole world. Let's get something straight. The U.S. government is not defaulting on its debt. Now, could there be closures in some parts of the government? Yes, there could be. Has it happened before? Yes, it's happened before. Has it been the complete end of the world? No. But this time, with the looming recession coming, if parts of the government shut down, yes, that's only going to make it worse, not only for the economy, it's going to clearly make it worse for the people that get shut out for those 3, 4, 5 days until the pressure is so much on Congress to come together and ultimately sign the deal. Because we all know that's going to happen. They are going to raise the debt ceiling. They're going to make all this drama and create all this chaos right up until the 11th hour. But does it make it uncomfortable? Sure. Is it gonna play into the recessions rate? Absolutely, unless of course they come to the table like adults and they come to an agreement and there's a little bit of compromise on both sides, and then they raise the ceiling. Then I think that takes that argument off the table.
Well, listen, anybody who knows you understands you're also an enthusiastic chef. You love to cook, give out recipes. What's in season right now in America? What are you cooking with?
Well, so listen, yesterday, and I put it on my Twitter, you can see the picture. I made pasta shells with sweet sausage and peas in a chicken stock and white wine sauce. Oh my God, it was so delicious. You can see the picture right there. But look, we're coming into the spring, summer season. So now we're coming into all the spring vegetables, barbecues outside, all that stuff. So beware, because on my note, you're going to get more and more recipes every week.
Kenny Polcari, founder of Kace Capital. It's always great to chat to you. Many thanks for your time.
Thank you.